Hey, it's Mack with PriceActionTradingSystem.com. This is Thursday. It's December the 12th. This will be our chart lesson for Thursday. And, as good as yesterday was, today was about that nondescript. It was just a trading range day. We had some swings from each side. We had a little failed breakout here early in the morning, and then we finally failed on the breakout during the overnight down here. During the later in the morning during the regular hours here, and then we trended back up and tested the high side once again, and then trended back down and closed down on the low end. So um, it's a pretty obvious trading range. It was a little bit higher earlier. These were kind of the yesterday's highs, and that ended up kind of being the uh, area where you got the most touches across there that I saw. That looked like that was the strong support or strong resistance, I should say, right across there. And most of your strong support was right around the 1776 area in here. Um, Looks like 1775 and 1775.50 and 1781. So, 6 points or so there. 5 or 6 points range. Enough room to make some money. There were some fairly decent setups here. But I'll show you what I saw, and then we'll go from there. And today is rollover day. I get a lot of questions about that. I usually wait a day or two. What I'll do is I'll go ahead and open up um, the next contract, and I'll just watch it. And when the volume switches, I'll switch. As long as the volume's still, and it's usually a day or two after the rollover date before I will normally switch. So just to make that clear, I traded the December contract today. So, and that's what we're going to use for our chart lesson as well. But let me show you what I saw on the trades, and we can go from there. Let me back out just a hair. We had a little trend working up. We had the break, and then a retest. I think we made a new high by just one tick. Yeah, you can see that. We made a new high. We kept trying to go higher, and then we turned down and had a second entry short right there. That was the first. Actually, let me back up. We did have a trade here. And this is one of those that throws you off a little bit because we just really sold off hard off that high. And you're looking for a retest, and you just don't know when it's going to come. And so what you do is just draw your little trend line. This one was about like this right here. And you can see that it might have been a little bit lower right there, like so. And you finally get your break, and you get two legs down. You can't get a new low though, and the reason is because people are trying to take it up. So you might have got tripped up in here. This is kind of, I really should have. I'm gonna go ahead and circle this in the lavender color. You could have gotten tripped up here, and I could understand why. And then again, on the other hand, once we started going up, you should have looked for a measured leg about like so. And you can see we didn't quite get there, and that would have been a clue that we, once we started trending back down. But it's a trading range day, and we did get a little bit higher this time than last time, but we couldn't go but maybe a tick higher. And that's generally what you'll see. So once you got your little break here and your retest, the reason I like this, there's two legs back. It may be hard to see it with this stuff in the way. Let me get it out of the way. And you got a little two-legged correction there. And the only reason I liked it was because it was a short trap. You got first leg down, pull back, second entry short right there. And it's a fairly good setup. But if you draw that trend line right there, you had to be leery about going short without another, with a retest here. Plus, we were looking for a high on a retest on this. But right here, you could have been looking for a retest on the low as well. So you could have gotten tripped up in here. But notice all that overlap, the matching lows right there. It's just not a very good setup. It looked like it might have been a long trap. So you could have gotten trapped short, but in reversed, if you did get trapped to the short side, you had to either reverse or just exit. I usually recommend exiting for less experienced traders. The reason being that you usually end up losing twice. So, I mean, there was actually a second entry long here off a little bit higher low. So you might even got tripped up long there. And then if you reversed here and then it went longer and you reversed there and then it turns down, you reverse there. This just turned into congestion. And so you really were better off just to sit tight instead of taking any trade. And if you draw your little matching lows across here, you can see the little small trap where it ticked one tick lower. And that's all they're doing. They're running the stops down here before they take it up, and then it turned up, and it was a second entry long counting. And we are swinging higher. We're making higher highs here and higher lows. So, and that was another clue to maybe not take a short here. Even if you didn't see the channel and were thinking retest, we didn't. We got hung up in the middle, and we made a higher low, then a higher high, and then we couldn't make a low. If we'd have made a lower low here and then came up, maybe, yeah, going short. But when it made that double bottom, you don't want to be going short right there into that support because there's a good chance exactly what happened would happen to you. And so I liked going long off that trap, but otherwise I didn't like doing anything in there because of the congestion and it being right in the middle of the price action. And that's generally where most no man's land. And you got a repeat pattern here, exactly the same thing in here, right here, except it traded from the upside instead of trading from the downside. But it's the exact same pattern for the most part. And you notice it failed out the high here, failed out the high here, then it comes down, and it fails out the low here and reverses, and it comes down, fails out the low here and reverses. So it's a repeat pattern. If you notice that, you probably would have gone long here, but I'm guessing most people didn't spot that. I'll go ahead and mark it in case you did. But that's really kind of a repeat type pattern there. So first trade was a long, then we already talked about the short. Failed break higher, first entry pullback, second entry, chance to go long. You might have tried to use a limit order here, and it would have come back here and filled you. Or you might have just got filled right in here. Even if you use a stop, you would have gotten out. It really looked like a trading range by then because you're on the low side of the EMA, high side, low side, high side, low side, high side. So you're swinging back and forth, and most of your resistance at this point is right up here, and we just came right off of that. And that's a very bearish, what I call a bearish reversal bar, and it is a second entry. It really, you could have started the count over here, but it's still a first entry pullback, second entry. It's a failed second entry long, and it's like a second entry off the top. It's not by the rules perfect, but if it looks close enough, it's going to act the same. Take it. And you're looking for another leg down, at least like that one, and you see it took on off and moved down. And then you get the correction here. I didn't like going long there. You could have gone ahead and gone there because you got the little trap that went higher. You notice it can't close outside the trend line. So if you wanted to, you could have gone short there. But when it ticked higher and turned back down again, you got to go short right there. And it's off to the races. You don't know that it's going to go down, but you got this trend line working and this little channel, and it's perfect. It's a perfect channel, real easy to spot channel. If you didn't spot that channel, you probably need some work on your trend lines and your channels. And then again, you might have thought about going long, especially with that little one tick trap right there. But there'd been no break of this, so I just thought it was really too risky. An aggressive trader might have taken that, especially since it broke lower first and then broke out the high side in the same bar. I'd probably drop a limit order right there if I wanted to take this trade, and it would have come back and filled you, gave you a couple of chances, and then it went on higher. I think you're better off to leave that one alone since you got the trend channel working down and no break yet. So you finally get a break, and this is just really a measured move here. Notice your first leg. I'd call that probably your first leg, and then there's your second leg. I'm going to tick or two higher. And if you measured that whole thing, it's probably a perfect measured move. If you measured that all the way up and then there, and then it is a perfect measured move. So perfect two measure. two legs up. If you saw the repeat pattern in the trap, you could have gone long there. I'm really tempted to change it to green, but it's the same thing as this, so it's hard to ignore it. And there is a trap, so you figure they're probably going to run it out the high side. At least it may go all the way back up to here because you're coming off the low side, so you're somewhat expecting it to go all the way up to here. But by that time, really the range had moved down to here. Hopefully you can see that resistance across there, and that's a failed break above it. You never really got a second entry, and then you get a little two-legged correction here, right off the trend line, chance to go short there. It backed up a little bit. Since it didn't close on its low, right there, that bar didn't close on its low. So, and it actually opened up here and turned and went out. So you could have had your stop sitting right there. If not, I would have dropped a limit order in here when it didn't close on its low. And it would have come all the way back to right in here and filled you. So, but then you get a second entry right here after a failed second entry long. So, a great chance to enter on a second entry short counting off the high. You did get a little break of the channel here. So, when it bounced and came back, this one was real iffy to me. You know, I didn't really like going long there, but what it kind of, you know, I'll show you what I saw that led me to think that some others probably saw it. And it looked like a spiking channel. Can you see that channel right there? And if that's the case, there is enough room to get out before you get down to these lows. So you might have taken that. I think it's really aggressive because it's real tight on your space getting out. Let me just count it. Eyeballing it. If you use the stop, which you just about had to, you were in at 76.50, and to get down to the lows, you know, you got just enough really to get out. And you see it did kind of hesitate there, but you would have had it would have worked. So I drew that one in green. An aggressive trader might risk entering there and be smart enough to know that, hey, if I don't get filled on my limit order and it starts to bounce, I'll get the heck out real quick. But boy, this thing went on through, and that sometimes you get rewarded for being aggressive, and that's one of the things that. But I still say that's an aggressive trade, and that's why I was a little hesitant to mark that one in red. Okay, sorry, I had a little interruption there, and then we failed out the low side. We did have a break and a retest here, unless it was a spiking channel, which I was concerned that it might have been a spiking channel. And you can see that there. Maybe if I move these out of the way, we don't need those now. You can kind of see there's a spiking channel. We way overshot it here. And an overshoot, I get asked about overshoots a lot. An overshoot of the channel just means the market's, if it's going down, it's really weak, and if it's going up, it's really strong. A lot of times it will lead to a reversal, though, and you can see that's what happened here. It led to a reversal, and we went all the way back to the other side. So there's not much other to say about them than that. You know, it doesn't reverse enough to say in a real strong downtrend you might overshoot it multiple times and never reverse. So, you know, you can't really set some specific rules around overshoots. Just understand that it means the market's either really strong in an uptrend or really weak in a downtrend. And a lot of times the market gets overdone like it did. You know, the market's getting overdone, and so it reverses, and, you know, you don't get a real big retest or even a retest. We tried to come back for that, but I would almost say that because of the overshoot here, I really think the channel was like I showed it, and we had the break already. But you might have seen it this way. So, and I'm sure some people, you know, saw it both ways. So, but definitely don't want to be going short right here at the strong, because we broke. It's like an overshoot, and it could be a break. It could work like a breakout pullback short, but you see it just created a short trap, and so you go long right there, and that gets you in this trend. Easy move up, and your runner would have been safe on that trade. And then you get another chance right here on this bar. I would have used a limit order. It did come back. You wouldn't have got filled originally, and most people are too timid to stay in a trade when it comes back like that, but that's where you get your best entries. And if you had have done that, you could have got filled all the way to a tick into this bar, and any runners would have been safe that way all the way to the top. Sometimes these, if you're reading it right, these are less if it comes back, though. That's the problem. Sometimes it doesn't. But even if you entered with a stop there, you were safe. It never would have, as long as you kept your stop down here where it's supposed to go, it never would have threatened it. And you get now this is a breakout pullback long you want to take, or in a little trend going up, and it breaks out of that little congestion area, pulls back, and it traps people here. Notice that little one tick lower, and that's where all the weekends decide, hey, it's moving down enough, I'm going to get short, and then it immediately reverses, and they're trapped, and boom, off it goes again. And you could tell that was a trap by how well it shot off there. And then you came back and got another little trap here. You actually got to close outside the trend line, so, and then it'll move to a new high, and then it was over. But you want to take that little trap right there. It's getting close to these highs, but with the trap and the fact that you're looking for a retest of the high, you figure you might probably go back and retest something up here, and you see we really went a little higher than that. We went all the way to there. And that was pretty much it for today. So that's what I saw, a range day. Your best trades are usually off the lows or off the highs. I'd wait on second entries, and I think that's the safe way to go. But some days, you may take a first, an aggressive trader may take a first entry, but I think most traders are better off to wait for a confirmation that prices are going to bounce and take the second entry. And a real aggressive trader will take the first entry, and somebody that really is reading the price action well, that likes to be super aggressive, will probably just have an order waiting, when prices are coming down. They just got a buy stop sitting here, a tick or so off that low, and they just buy it automatically and have a tight stop. And you notice that you could do that. Even this one that never really gave you a good setup, if you'd have done it that way, it would have been a winner. Now here you would have lost out, but you got through here this time, so when it comes back, it may not be as strong as support, and you got to keep that in mind. And notice if you'd have just had a stop sitting up here, a sell limit order sitting up here, for the most part, very close to the last high each time, you probably would have gotten filled and had an easy sale. But I don't, I'm hesitant to even say that, because I know traders will start using it and they'll automatically start losing because they'll see ranges that aren't there, and they'll see trends that aren't there. And but I get a lot of questions about it, and I've actually demonstrated some live trades using, entering blindly like that myself. I wish I'd gone back, and if I had it to do over, I probably wouldn't, because I think it just leads people to do things that they shouldn't be doing. We're not gamblers, we're day traders. And if you're a gambler, you'd be better off to go to the casino. You probably got better odds gambling there than you do in this market. Because if you gamble in the market, you're going to be just out a gambler, and you're going to lose. Well, the idea is to put the odds on our side and take the high probability trades that have a very high likelihood of succeeding. And by doing that, we're not gamblers. We're only taking the high probability setups that we know are likely to make us money. And so we swing the odds way in our favor above 50%. And all you need is 51%, and the casinos know that, and that's usually, most of their best games are 51 to 53% odds in their favor, and that's all they need. They know they're going to lose a lot of bets, but in the long term, they're going to make money, and that's how they run their business. And that's how we have to do ours as traders. If we're gambling and we're just rolling the dice, you're really gambling against the casino if you're gambling in the market, because the odds, smart traders, the odds are on their side. That's the bottom line. The traders that are making money make money because they have the odds on their side. They know the high probability winning trades, and that's the one they're going to take, and that's the ones you've got to learn to spot and trade, and that's the ones I'm showing you. So hope that makes sense to you. We're about 20 minutes into this. I'm going to wrap it up. There's a possibility there may not be a chart lesson on Friday, tomorrow on Friday. Most likely I'm going to be in trading. If I do, I'll do a chart lesson. But if the weather's nice, I may just take a long weekend. It's getting slow this time of year anyway, and it's around the holidays, and my kids are going to be out of school, and so I may take the day off. I hadn't decided yet, but if you don't see a chart lesson tomorrow, you'll know why. I took a 3-day weekend, and I'll be back Monday. But if I'm here, I'll do a chart lesson. But I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.